Good morning. This is Axel Merk, President Chief Investment Officer of Merck Investments. Coming today to you on a day where we have again initial jobless claims that are very, very high, a little worse than expected, although the trend has been coming down. Um, it's pretty clear now that the unemployment rate that will be shown next month or the month after is going to be above 20%. Um, and so quite stunning numbers. As I speak here, the S&P has recovered kind of from a low overnight. It's currently flattish. The Dow is up 85. Um, on the bond market, it's a tad different today because Bloomberg has put up the 20-year. Yesterday there was the issuance of a 20-year bond for the first time in a long time, first time ever. In any case, the 10-year is up 3 ticks, and the 30-year is up 13 ticks, and the 20-year is up 10 ticks. So that's it's fitting right in between there. Demand was quite strong for the 20-year. Part of the reason Treasury is reluctant to issue these new bond maturities is because they have little doubt that they can get a lot of demand in the short term. The question is, how will these products evolve in the medium term? It's, I think, one of the key reasons why they've been reluctant to come up with a 50-year bond, for example. Um, and down today is gold. Gold is down 1%, minus 19 bucks right now at 17.29. The futures is just a tad above the spot market. Indeed, as I talk, it continues to come down. So it's at 17.28 right now. And so that's why I was just hesitant. But the contract that's on the board is the active contract, is the June contract. And so the spot and the futures price are supposed to converge. We just had recently this disruption in COMEX, and that's part of the reason why we're watching both the spot and the futures market. We always watch it, but why I've been talking about it more. The 3-month T-bill is at 11 basis points, the 3-month LIBOR rate at 37. And so that one is working that market now. Fed funds effective rate is at 5 basis points. VIX curve is positively sloped, and so the VIX is at 27.76. And so if the future is more fearful than the past, then that's quote unquote normal. Obviously, the spot volatility is still rather high. Down today is China. As you may have heard, China has been in the news because of the Senate passing legislation to delist Chinese companies, and whether or not that will make it to the House is an open question. But clearly, the rhetoric is increasing on that front, and so we'll see. China is very relevant for the kind of global economy. China is exporting a lot of stuff, and if China doesn't do well, the rest of the world doesn't do so well either. And so on that note, the NOK is now positive. The Norwegian kroner is up 8 basis points. The worst performance actually, the Swiss franc down 32 basis points. The yen is down 20 basis points. So all those safe havens, including gold, obviously is down as well. Gold, by the way, is down now 1.25%, 1.2%. But right above that is the Australian dollar, that's also weak, down 14 basis points. It's quite a narrow range, but it just Australia has a lot of exposure because of its iron ore export to China, and so we'll have to watch that. And just looking at the board, the Brazilian real is up 2%. Latin America is in the news because they have currently the kind of the biggest struggle with the coronavirus. Global equity markets are kind of mixed, flattish for the most part. The FTSE in the UK is up 27 basis points, but the Euro Stoxx is down 30. The DAX, let me just mention that, it's down 44 basis points. Earlier this week, it was mentioned that Lufthansa might get kicked out of the DAX, and as I mentioned, as security, let me put my disclosure up here. There's not a recommendation on Lufthansa in any stretch or means. It's just that they are struggling with the coronavirus just as much as anybody else. Today, there is talk about the bailout they might be getting from the German government, and it appears that there's 8 or 9 billion euros they're getting for a 20% stake, and then some convertible stock that could get their stake up to 25% to get some blocking minority against takeovers. I thought the government had a veto there already anyway on takeovers. But in any case, a lot of talk. From what I've seen, there has been no restrictions on how they operate. There's restriction on executive compensation. There had been calls that they should only do should not. In Germany in particular, there have been discussions that the short flights should be done by train and not by air. Obviously, you can say, hey, competitive pressure should decide on that. There's obviously the green movement that's advocating that, and the more handcuffs you put on management, the more difficult it is for them to make decisions based on economic reasons. And obviously, politicians have every right to ponder about other choices, but it doesn't appear that there are these sort of things. Similarly, there's a call for some incentives to be paid to buy a new car. Not too surprisingly, that market hasn't been doing so great, and cars are big ticket purchases, and so and at least in the U.S., a lot of the used car market is flooded right now. And so people will be reluctant probably to buy a new car. Somewhat related, the motorcycle industry has also kind of gotten a hit. The spring season is the prime season when motorcycles are sold. Some manufacturers are saying that there's pent-up demand, and if my weekend trips to my essential hiding place are any indication, that is correct. The motorcycles have been coming out, and it seems like it's kind of one way to express your freedom, so to speak. And so those guys and gals have been out and about. Talking about, and again, I don't want to give securities recommendation, but we've had some online retailers come out with astounding, or brick and mortar retailers come out with astounding online sales. And if you're like me, your favorite, or not favorite necessarily, but go-to place, Amazon, had difficulty fulfilling some orders, and so I shopped elsewhere. And the question really is to me whether those sort of things will stick. I had noticed that some of the prices weren't right either. And so I've been a little pickier in looking, scouting around. But my guess is we're going to be lazy sooner than later and go back to our old habits. Again, not an investment recommendation, but still, those things have been market moving. That's part of the reason why I mention it. Then let me just see. Do I still have? Yes, I just see. I still have the disclosure up there. So sorry about that. I happen to see that. Then let me just give you a few other items here. It was in the news. It's not news per se that the Fed owns up to 70% of some of the issuances further out, and so that just shows how the entire bond market is completely distorted. The markets are distorted, rather concerning. We'll have to see how this all works out. As I've indicated in the past, I'm mostly concerned about the long-term political fallout of everything that we're doing right now. The financial crisis gave us a rise in socialist sentiment, and I don't even want to imagine what we're going to get out of what we're doing right now. Lots of businesses that don't need bailouts are taking money from the government because it's available, and that may feel good now, but the backlash against that is likely going to be significant. And the question is it just bad for those companies to be in the media, or will there be will that have an impact on the actual policies that are going to be implemented? Other than that, let me just see whether there's anything else on the board that's exciting. It says here a long weekend is coming up. No, it doesn't say that, but a long weekend is coming up. And with that, volume may well come lower. I have no idea whether the traditional behavior and people kind of being less engaged in the markets will play out towards the end of a week like this. That remains to be seen. Good. I am going to leave it right here. Have a good week. And if I don't talk to you before the long weekend, have a fantastic long weekend. Hope you are able to get out somehow, somewhere. Take care. Bye.